When Bitcoin had a breakout in April right here, we were watching this structure built with higher highs and higher lows. It looked solid at that point, bulls were really excited. However, I was saying that the 200-day SMA is approaching from the top and will act as resistance most likely like it did in 2022 bear market in 2018. And so once we hit it in early May, shortly after we had the 3 bars down signal, which in swing trading suggests that the price wants to go lower. And it did, even though there was a temporary bounce. In our previous videos, I mentioned that it's important to hold the 78K level for the structure not to be broken. But the bounce from the 200-day SMA, the 3 bars down, the breakage of the 78K level all led to us being here. And yesterday we lost the 75K level. That means most likely we're going to test the 71K level next, which is the 50% of this move. If that level is broken, this move right here will be invalidated. So all that will be left for the bulls is the 65K level right here. And now with how things are evolving, we see more and more probability for that to happen. On top of that, the volume is in red. There's a lot of selling off going on at the moment. Now for S&P, since its low in October of 2022, it has been holding up its structure quite well, moving above the 200-day SMA. But there has been 1, 2, 3, and now 4th closes beneath the 200-day SMA. In swing trading, the more touches you get to a particular level, whether that's support or resistance, the more vulnerable that level becomes. And especially with these closes below, there's now an increased likelihood that the price might be breaking down, or at least this would be contributing to the breakage of the price. Couple that with us trading in the all-time high territory and the 3 bars down signal, any long-term trades taking around this area should be with caution. In addition to that, the RSI has been holding up in the overbought territory since April. I'm curious to see whether this red candle that is printing right here is going to form a double top, and eventually all of this will come into play. But for now, price is king. We're in all-time high territory, so let's see how this evolves. Now for gold, if we take the 200-day SMA from its low in November 2022, there has been only one breakage of the 200-day SMA right here in September 23. Other than that, it has been steadily holding above. So from that perspective, gold is doing much better. But right now, it's at a very important level. It's actually sitting on top of this high in October of last year. It's also touching the 200-day SMA, and it's testing the 23% of the fib retracement. If price bounces from here, there's a likelihood we're going to go back and try to test the 38% level. If price breaks, we're going to have to be on the lookout and see if it might test the 4.2K and then even lower at 3.9. So out of all three, gold, S&P, and Bitcoin, gold is doing much better in terms of bullishness, in terms of structure. However, if you're not a perma bull or a perma bear and you're flexible in your trading, you're going to be profiting from the market regardless of which direction it takes. Hit that follow button for more trading analysis like this.